Welcome to the Last Trader Talk radio session for May 2023. Name is George, for those that don't know me. What I want to do with you today is just talk about tradable breakouts from a price action perspective. Now, I'm fully aware that there's different approaches to trading breakouts. Traders trade breakouts differently. So I'm hoping that what I'm sharing with you is just an addition to what you've already been exposed to, and hopefully that composite of different ways of trading breakouts will strengthen your way of trading breakouts. So consider this as just one extra element of how to look at breakouts. So purely from a price action perspective, what I'm going to do, I'm just going to use one chart here. Now, please bear in mind, from a price action perspective, it really doesn't matter whether I'm trading off a monthly chart or a 5-minute chart or any other time frame in between. The price action patterns that we see are fractal. Okay, so basically, just to simplify that, is whatever I see on this particular chart, I'll be able to see on a different chart. And if I didn't tell you what market it was, what asset it was, what time frame it was, there is absolutely, and if I didn't give you the price line, on the price line on the right-hand side, there's no ways you'd even guess what market this could be. It could be any market. It could be oranges, bananas, the Hang Seng 50, UK 100, S&P 500. It could be a currency. Whatever it may be, it could be an exotic currency. I mean, there is all sorts of talks presently of the BRICS countries plus their alliances. Now, BRICS is Brazil, Russia, India, China, South Africa. So, I'm not very big on following fundamentals, but because I'm in South Africa, BRICS is a pretty hot topic because we're part of that alliance. There's talks of not utilizing the US dollar and starting to create an own currency. And a lot of countries are now saying, we don't use the US dollar, let's only trade in our currency, which I'm from Zimbabwe originally. I mean, that nation broke away and said, well, we only going to use the Zimbabwe dollar and nothing else. A lot of chaos carried on, ensued in the financial markets. So presently, they have their own currency, but they also have the US dollar. Interesting, isn't it? So the US dollar, from my perspective, is still the world's reserve currency, and there are moves to create another alternative reserve currency, and that's perfectly fine. When it becomes strong enough to become tradable and everything is quoted against it, we'll just carry on trading. We'll start trading against that. Now, that's the extent of my sharing of fundamentals with you. If you want to understand how to trade using fundamentals, how to get insights into fundamentals, I know a lot of traders talk about it, but I'm privileged to be exposed to trading buddies, Jeff and Ash, and I join the shows on Mondays. So if you really want to get insights into fundamentals, at least I know those traders really dig into it. But from a price action perspective, whatever is taking place within the fundamentals is ultimately baked into the price, or if it's not already baked into the price, will become reflected as the market starts to make specific moves or distinct moves in one direction or the other, either going up, going down, or even staying in a trading range. So doesn't matter what it is. What I'm showing you is relevant to any market, any chart from a price action perspective. So firstly, in order to be able to trade breakouts from a price action, we need to be able to identify breakouts. And the way we identify breakouts is in two stages. We have to see a breakout candle, a candle breaking out of something, and then we have to see the confirmation of that breakout. So the very first thing for us to start to say, well, I'm going to be trading breakouts, is for us to be able to see a breakout candle. So I've just got a few markings here, breakout candles, which we'll use. So the very first, let's just start here on this day. Okay, so there is a breakout candle. Why? It's a huge candle. It's breaking out of a converging triangle. At the open, it's breaking out of below plenty of lows. So we can all see that's a breakout candle, okay? What other breakout candles do you see on this chart? Okay, so now we come down here. There's no breakout candles breaking out of anything, but we see this bull candle. Oh, hang on a second, George. There is a breakout candle right here. That bull candle is a breakout candle, is breaking out of the highs there. Then where's the next breakout candle? Well, there's the next breakout candle breaking out above that. Where's the next one? Well, there's the next breakout candle. So then you look at this cluster, and you say, well, is there a breakout candle here? Well, there is right here. This bear candle is a breakout candle. It's breaking out beneath that breakout candle that kind of reverses the direction of the market. So that's a breakout candle. Where is the next one? That bull candle is a breakout candle because it is breaking out above the high of the previous candle. So that's a breakout candle. Then the market goes sideways and there is no breakout candle in here. If you just look at it, nothing is breaking out of anything until we get this bull candle, bull breakout candle. And when is next, where is the next breakout candle? Next breakout candle is here. That bear candle, she's just breaking out below the low of George. That's not a breakout candle. Didn't break out below. This is the breakout candle. That is a reversal candle. That low did not break out beneath that low, close beneath it. That's not it. But this is a breakout candle. The next candle is a breakout candle. That is a breakout candle. Next candle is a breakout candle. The next candle is a breakout candle. So we've got a series of breakout candles here. Okay. And where is the next breakout candle? The next breakout candle is this candle. So I'm gonna let's do this. I want to just give you a little definition that will assist just now. Let's just work through this a little bit. Where is the next breakout candle in here? The next breakout candle is this candle. That's the only candle that's distinct, that's breaking out, in this case, below something. That bear candle, let's just move this up a bit, is a breakout candle. Then you are watching the market as it goes along and say, where is the next breakout candle? The next breakout candle is here. Nothing since we had that candle breaking out beneath that, we don't have a breakout candle anywhere in these candles until we get to this candle. And this candle is a breakout candle, very small close beneath the low of the previous candle, but it is a breakout candle. That's our next breakout candle. And where is the next breakout candle? I'm hoping you're starting to get a sense before I even give you a definition of what to look for in terms of breakout candles. There is a breakout candle. And where is the next breakout candle? There is the next breakout candle breaking out beneath that. And the next breakout candle. There is the next breakout candle. And the next breakout candle after that, there is the next breakout candle. That's not a breakout candle, but that's a breakout candle. We're going to use this. That's a breakout candle. Then that's a breakout candle. We'll come back in a short while and say, well, why are these breakout candles? All of them. So there is a breakout candle. No other breakout candle here. I mean, that's if you look at this with the magnifying glass, that's a breakout candle because it's just broken out beneath that low and closed beneath it. So that technically is a breakout candle. Next candle, breakout candle. And then we look in here and we're trying to find a breakout candle, and there is a breakout candle breaking out of something. Okay, George, don't start defining it. Let's finish the process. Looking carefully to look for a breakout candle, and that's pushing it. That's a breakout candle. And I'm looking through here and say, oh, okay, now it's getting clearer. There's a breakout candle. That's not a breakout candle. That's a breakout candle. When they get big and large, everyone will say, oh, I can see the breakout candle. There's a breakout candle. There is a breakout candle. And let's kind of stop there. So breakout candles, I've been pointing out to you breakout candles. Now, what is a breakout candle? So I'm just going to make a note here because it makes it easier if you kind of go through this video and look at it again. Breakout candles. First and foremost, a breakout candle must be a trend candle. Okay. Any trend candle is a breakout candle. So number one rule, one of the, they're not in an order. One of the key things to look out for is I'm looking for a trend candle. Okay, must be a trend candle. Then must break out of something. At the very least, you yourself, before you talk to your trading buddies, your friends, etc., look at that breakout. Everyone says, yeah, no, we agree. You got to say to yourself, well, I can see that the market is breaking out of something. Whatever that something is, I want to see that the market is breaking out of something. And that something could be one candle, one bar, we break out of one candle, one bar, or a pattern. Small or large. It could be a small pattern or a small or large pattern. It could be breaking out of just, one doji, breaking out of a doji candle. A doji candle is a trading range, or is breaking out of a prolonged trading range. That would be a larger pattern. So it must be a trend candle, must break out of something. And that something is either one candle, a pattern, which could be small or large. Then this probably is logical. The bigger the breakout, the stronger the forces. Probably hear me talk of forces controlling the market. So the bigger the breakout candle, and I'm going to put in brackets, what is broken out of? Okay, the bigger the breakout candle and the bigger what is broken out of, the stronger the forces. So what I mean, we can use this as an example. Look at that huge breakout, one candle, that's a huge breakout. It's breaking out beneath a converging triangle, but not only that, it's breaking out. This is now the US session, because so as it opens this whole US session, so it's breaking out beyond a bigger pattern. So the bigger the candle, of course, and the bigger what is broken out of, the stronger the forces behind the breakout. Okay. Now, that's that's what you kind of look off in terms of what is a breakout. Now, here is the thing. A breakout is just a breakout. But in order for us to trade it, the breakout must be confirmed. We only start to trade confirmed breakouts. So from a price action perspective, the first thing you want to see is the breakout. Then the second thing you want to see is the confirmation of the breakout. Then you can start to look for trades and ways to jump into the market. So let us do this. Breakout candles. Now I'm just going to call this trading breakouts. First, there must be a breakout. See above knots. Okay, so there are the knots. There must be a breakout. See above the knots. Okay, then there must be confirmation of the breakout. by way of a follow-through breakout candle. The next slide. Okay, so we're going to go on to the next slide quickly and just put that in. So point is, first of all, you need to see the breakout. And once you see the breakout, if you want to trade it, then there must be a confirmation of breakout by way of a follow-through breakout candle. So very quickly, breakout candles, okay? We've seen that. They are trend candles. If you ever look at all the ones that we mark, they are trend candles. They are not dojis. A doji is not a trend candle, okay? And if you just take time to look at it, they are breaking out of something, either breaking out of, a micro double top or micro double bottom just here. Here we spoke about that. That is breaking out above that. That's breaking out above another trend candle. Here, this bear candle is breaking beneath here. Bull candle breaking out above something. So you can just look at all of them that we call breakout candles. They are doing exactly what we spoke about, okay? And where they haven't done that, that's not a breakout candle, but that becomes a breakout candle breaking out beneath that. That's a breakout candle breaking out beneath that. That's a breakout candle breaking out. And it's a trend candle. Had this, this tail been a little bit higher, and erasing most of that body, then we could have said, well, that's actually a doji. It's a failed breakout in itself. But for now, it's a breakout candle. The tail is, just less than the midpoint. So we just take the same slide. We're going to duplicate it. So that now becomes this slide. Okay. So what we are looking for here is the confirmation of the breakout. So we want to see if any of these do have confirmation at all. If they have, then we say, oh, okay, so these are tradable breakouts. If there is no confirmation, candle confirming breakout. So we need to see a follow-through candle that is confirming the breakout. That's what you want to be looking for. So you might have to have a little exercise for yourself. Get this chart or recreate one of your own and have a look. I'm just going to do a few for the purposes of time. So we had this big breakout. Was it confirmed? It wasn't confirmed. There's no follow-through candle. So if you took this trade because you saw the strength of that, you have to put your stop way up there. And you have to be comfortable with getting pulled back, showing losses. That's perfectly fine if you're doing that consciously. And it might be a big loss depending on how much you went in. If you're trading 1% and you put a major move up there, if you're doing 0.25%. But if you take that trade before the confirmation, expect a pullback. So there was no confirmation there. So there's no trade to take. Here, breakout candle, this one, was there confirmation? No, there was no follow through. There was a breakout trade. Was there confirmation? Yes, that was a confirming candle. That one there. Okay, that was a confirming candle. Would you take that trade? Well, you wouldn't take it because you're coming up to clusters of resistance, etc. But that is a confirmation candle. Throughout here, breakout candle, no confirmation. Breakout candle, no confirmation. Breakout candle, no confirmation. Breakout candle, there is confirmation. So there is, after that breakout candle, there is confirmation. Would you take that trade? Yes, you can take that trade. All of the factors, put your stop above there, but that's a confirming breakout. So breakout trade, follow through. Would you take that? Maybe not because of the small tail. Follow through, still a confirmation of the breakout, but you get into the low of yesterday. So it looks a little bit cluttered, so forgive me. I could change those colors. Maybe I will. These two confirmed breakouts. So we got confirmation of the breakouts. Whether you trade them or not becomes a matter of other factors. Okay, that's probably better. Let's read it. Let's read it. My daughter would argue with me that you can't read it, but I said, no, I'm using it as a verb. Let's jump to here. Where is our confirmation candle? So we pointed out that's a breakout candle. This one here, there is a confirming candle. Okay, so there is a breakout. There is a confirming candle, confirming the breakout. Fantastic. I'll look at that just now. There's a few more breakout candles. There is a breakout candle. There is a confirmation of the breakout. It's the candle after the breakout. Breakout candles, no confirmation at all in here. So just because there is no follow through, so there is no confirmation that was there for us. Let's just bring this, or let's do it this side and let's have a look. Have we done this side? Let's do it here. Okay, breakout candle. Okay, so we had that was confirming that is confirming that, so that is confirming the breakout. Breakout confirmation, breakout. So all of these are confirming the earlier breakout. So now we are in a trend, successive confirmation. We are now in a trend. Let's put it this way. So you have the breakout, there is a confirmation. The follow-through candles are breakout candles, trend candles. And as more we continue to have trend candles, we are confirming the breakout from the previous candle and confirming the whole bear breakout. So that series of trend candles all become confirming trends, confirming breakouts. I just want to make a note here. Series of trend candles. Okay, so that series of trend candles is all confirming the breakouts. And then lastly, if we just, let's just have a look here. So breakout candle, that didn't confirm it. Okay, the way to trade it, there was a break, so that's a breakout that didn't confirm it. This trend candle is a breakout candle and also a candle confirming this breakout, for the simple reason that the candle after the first breakout was an inside candle. Okay, so it wasn't a doji. So these two candles complete one candle. So this is a breakout candle on its own, but also confirming that earlier breakout. Then you have the next candle, confirming the breakout. So once you have the breakouts confirmed, then you then pull out from our trading toolbox strategies that we trade. And you probably heard me talking about breakout, pullback, low one. There's been a breakout, there's a pullback. Let's find ways to trade. Breakout, pullback, find ways to trade. That's then how you apply the strategies that we use to trade into trends using breakouts. So these are not reversal strategies, they're higher probability trades that come after breakouts. You can trade before the breakout. Those are reversal strategies, lower probability, higher risk. You need to know how to manage your risk. All right, traders, thank you very much. I hope you found that useful. My name is George, and enjoy the rest of the week.